What are the absolute first steps someone in the US should be thinking about when they're buying their first home, whether to live in or an investment?
The first thing you want to do is get pre-approved. This is for anybody who's even thinking about buying in a year or 2 years. What it does is it gives you the peace of mind that you know you're qualified for a certain loan amount.
I think based on your experience being in this market or in this space, do you have any thoughts or POV for first-time buyers who are kind of holding on, thinking that, I'll buy when the interest rates go down?
Now we're in a market where rates are nowhere near our 22 years high, a year ago, but they're not at the lowest. So monthly payment is really important. You want to make sure you feel comfortable, get your offer accepted at a fair price, and then you refinance later.
Do you have any thoughts on lender watch outs or lender red flags that one must keep in mind?
I would say the credit check is the most important because hard pulls, right? They can affect your scores. They expire in 4 months, and who knows how long your home search is going to take you. It is so disheartening to me when people pull credit without consent. We will never do that. Even if we have consent, we'll absolutely make sure.
Hi everyone, I am Priya from It's Okay and welcome back to our channel. And with us today is Esther from Cost Country Mortgage. Esther, we are so happy to have you. And the topic for today, for anyone who's tuning in, is everything that you need to know about buying your first house, whether you want to live in it or as an investment property. We're going to discuss that with Esther. Esther, welcome. Do you want to introduce yourself?
You. Absolutely. My name is Esther. Nice to meet you guys. I'm with the Lemeshev team, Cross Country Mortgage here in Hoboken. We are the largest local lender in Hudson County, top team in New Jersey, and #1 retail lender in the U.S. We offer conventional loans, FHA, VA, jumbo, and portfolio loans. So pretty much a loan for everybody. But thank you for having me, Priya.
Awesome. We are so excited to have you. And for anyone who's listening, please, this is not sponsored at all. I had a wonderful conversation with Esther as I was exploring this. I ended up learning so much from her that I thought it's only fair to bring her on board and share all of her awesomeness with you. So none of this is sponsored. We are just trying to make all this information available to you all. So thank you so much, Esther. And also to anyone who's listening, while Esther is based out of Hoboken, New York, New Jersey, I understand the audience is based across the US. Everything that we will talk about is to make sure that you just end up generally learning about the process of buying a house, things you need to keep in mind, etc. So it's broader. But of course, if you are in the New York, New Jersey area, no one better than Esther. I highly, highly recommend. But with that, we are going to get started. Does that sound good?
Yes, sounds great to me.
Okay, awesome. So today we're going to learn everything about buying your first house in the US. My first question is, let's start from the very beginning. What are the absolute first steps someone in the US should be thinking about when they're buying their first home, whether to live in or an investment?
Absolutely. The first thing you want to do is get pre-approved. This is for anybody who's even thinking about buying in a year or 2 years. I mean, there's people who start this process who are deciding on re-signing their lease. So it's very preliminary and it's what you make of it. What it does is it gives you the peace of mind that you know you're qualified for a certain loan amount. That way you're setting expectations. You're not wasting your time looking online for hours for homes that are outside your budget or you don't qualify. So #1, sets expectations, brings you one step closer. And another thing too is during the pre-approval process, rates move every day and the monthly payment is the most important decision-making factor. So we'll run numbers for you so that you have an understanding of your monthly payment. And that's by far the most important decision-making factor. So that's the very first step, getting your feet in the water, getting pre-approved.
Okay, perfect. I think you hit on a very important point, which is just doing the financial groundwork as you're taking this big step in the journey. Can you break down the key differences between pre-qualification and pre-approval and why they are essential for first-time buyers?
Absolutely. So pre-qualifications, we actually don't offer these. These are the letters that really hold no value. You can get them online within minutes. It's based off of self-reported income, self-reported assets. You're computing your own credit score. So it really doesn't hold value. It's not as competitive when you place an offer. Pre-approvals, which for us, it's just as preliminary. Application takes 5 minutes online. You upload the basics of income documents, bank statements. We do a soft pull credit check, which has no effect on your scores, contrary to the belief, soft pulls only. But pretty much a pre-approval letter, it strengthens your offer. You have the peace of mind that your documents have been reviewed, making it so that the hardest part is getting your offer accepted, essentially. And it is crucial because competitive areas like this, common practice is listing agents will call us and they'll say, got your letter, can you speak on their qualifications? And, we will of course put a great word. We have everything verified, A+ on paper, and it goes a long way with getting your offer accepted. So those are the differences.
Perfect. Now that's super helpful. And there is, and I don't want to jump into it straight away, but I think it's important to answer this question right now. Like there is just so much around interest rates fluctuation that is going on today in the market. Like things are not like at the 3% interest rate, and we don't know if it'll ever be at the 3% interest rate. I think based on your experience being in this market or in this space, do you have any thoughts or POV for first time buyers who are kind of holding on thinking that, I'll buy when the interest rates go down? Or is it still a good time to buy? Anything you can share will be super helpful.
Absolutely. So that right now we are in a wait and see market, right? There's a lot of tariff negotiations, things like that, which in the market prior, it was really just like payroll, inflation, and things like that would influence rates. For first time home buyers, it's so important to know you already are getting the best terms amongst all buyers, right? And although the rates are not where it was during COVID, 2-3%, those are artificial rates. But now we're in a market where rates are nowhere near our 22 years high, a year ago, but they're not at the lowest. So monthly payment is really important. You want to make sure you feel comfortable. There's a beauty in the market that we're in. It's, buy your home at a fair price now before the bidding war start, because everyone's thinking the same thing. I want to wait till rates cool down. So if you are comfortable with the monthly payment, get in, get your offer accepted at a fair price, and then you refinance later. You're just dating the interest rate. You're not married to it.
Okay. Actually, because you touched on refinance, let's talk about refinancing a little bit. Like, what is refinancing? Like, what happens if I end up buying a house today at a 7.5% interest rate? What does refinancing mean? How does it start? And what is the process and the cost that comes with it?
So refinances, they're painless, right? You can get it done in 2 weeks or you can drag it out for 30, 45 days. They're at your own time pace. Overall, the refinancing, that's to take advantage of a lower interest rate after you close. So for our past clients, we keep a constant pulse. We'll reach out when there's at least 0.5% of an improvement. Anything more, you definitely want to grab. Cost-wise, I would say as a past client, we cover lender fees. It depends on the state. So New Jersey, it's actually very cheap to refinance. You don't need an attorney. I would say roughly, at least with our team, around $2,000 to $3,000. And you can roll this into the loan amount or you can pay it out of pocket.
Okay, so it's a one-time 2,000 to 3,000 investment, and then whatever is the new interest rate, you end up moving to that. Is that accurate?
Exactly. Yep, that is correct.
Okay. Oh, yeah. So on the lines of finances, what are the main types of mortgages available to first-time home buyers in the US? Like we've heard about FHA, conventional loans. Like what are the crucial pros and cons of each of these?
Yeah, definitely. So I would say that there's no cons. It's really just the pros and whatever's in your best interest. So FHA loans, in a nutshell, a lot of people think they're for first-time home buyers, and they're actually just for primary residences. The main perks, lower credit score leniency, right? So you might have a 580 score, but you're getting nearly the same interest rate as someone who has an 800 in the conventional space, which makes affordability great, from that standpoint. Another benefit is higher debt to income ratio limits. So in most cases, people are able to qualify for higher price points given the higher debt to income ratio limits. And then of course, down payment, it's 3.5 down from 1 to 4 units, which is huge. So those are FHA loans. Conventional loans, that's like your most traditional type of loan. So of course, they have their own minimum down payments. We talked about debt to income, but the biggest difference is the mortgage insurance and how it's calculated. So for conventional loans, if you put less than 20% down, there's this monthly mortgage insurance that you pay per month. That's based off of credit score and down payment. Once you close and you make your payments, that mortgage insurance gets removed at 20% equity. For FHA loans, even if you put 20% down, there's monthly mortgage insurance that's based off of the loan amount. So it's really circumstantial. Like if you're putting 15% down and you have great credit and your mortgage insurance is $30, FHA likely won't be your best bet because that mortgage insurance is much higher. They also have an upfront mortgage insurance as well. Overall, though, in either situation, if the monthly payment is $1 less in either or scenario, we will include it as an option. But there's pros to each.
Got it. So if I understand this correctly, and I don't want to generalize it, but just for the audience that we have, for example, if you're looking to put a 20% down payment, and you have a great credit score, then does it make sense to go via the conventional route and explore FHA when you will only be putting like a 5%, you're kind of okay on the credit score? Is that like an accurate assumption of
Yes. Definitely. Like if you're putting 20% down, unless it's for debt to income ratio reasons or credit score where you have to go FHA, you'd want to go to conventional because mortgage insurance for FHA, if you're putting more than 10% down, it gets removed in 11 years. If you put less than 10% down at the time of the purchase, the only way to remove it is to refinance to conventional. So if conventional has you at a lower monthly payment from the start, you should start with that. But it's circumstantial, yeah.
Okay, super helpful. So, about the down payment, what are the other significant upfront costs first-time home buyers in the US should be prepared for beyond what the lender directly handles? So I just want to make sure that we talk about like appraisal fee, inspection costs, title agency. Like, can you give us a holistic perspective? Because I think a lot of people, when they're planning their homes, they're like, okay, I have the down payment, let's go into it. And then there is so much more that comes. So that breakdown will be helpful.
Definitely. What we hear often when buyers call in, they will say, oh, I heard that closing costs are around like 3-5% of the home value or the accepted offer. And while that can be the case, I want to say the best answer is it's property specific, the actual closing costs, because you do pay prepaid taxes at the time of the closing tailored to the specific property. So you might have a home that is a higher price point but lower taxes, and the closing costs are less than a home at a lower price point with higher taxes. So it really depends. Yeah. For us as lenders, we will give you, anytime you send us a listing, we'll give you an understanding of the estimated closing costs specific for that property. We'll also let you know all the key players like the attorney, the title company, appraisal, inspection, exactly what you mentioned. And we will also let you know which costs on there are variable and which ones are fixed. That way you avoid any surprises.
Can you elaborate on that a little bit? Just generally, for example, anyone who's listening to this, like I come in and I know that I have the down payment, then I hear from the lender that there will be closing costs. What do these closing costs encompass and what does that range look like?
I mean, it really depends, right? I want to say on average in New Jersey, $500K purchase price, it could be 10 to 12,000. And this includes a lot of parties involved, which you will shop for and you will choose yourself. So for example, like 1,500 of that is an estimated attorney fee, but your attorney might charge more or less. So it really is variable, but right around there, I would say.
Like, just to reiterate it back, like the closing costs will include your attorney fee, your title fee, your inspection fee, like all of that stuff. And a lot of that is going to be variable and some of that is going to be fixed. And you will have the ability to kind of shop for different providers depending upon what's the right fit for you.
Exactly. Yep. And I always, because nobody likes surprises, especially when it comes to money, I personally walk people through every loan estimate and I caution them of sections that will change, which ones always remain the same so that you can ask those questions in advance. But it really does matter on the parties that you select. And then most importantly, the taxes of the property, because you do pay a portion of it at closing.
Got it.
Yeah.
Okay. Can you elaborate on the purpose and the typical costs associated with a home appraisal and a home inspection? And why are these important to protect the buyer's interest?
Yeah, they're both in place to protect you, but in different ways. So the appraisal, that is the value of the home. And it's important to us too. We want to make sure that we're extending a loan and the home is worth what we're extending it for, right? It also protects the buyer because you know that you're not overpaying for a home. You know, you're buying the home for what it's worth. So that's the value, the appraisal. The inspection, that's actually for you as a buyer. So you go into the foundation and any issues going on with the unit. So structural, mechanical, environmental issues. And it gives you the opportunity to either negotiate with the sellers for credits, price reductions, things like that. Cost-wise, I would say they're very similar. They're third parties, but around $450 to $600, right around there, I would say.
Got it. So I think on the appraisal, like, just want to talk about, is this a red flag, or how should one navigate if someone, for example, when you are going to buy a house, if they're saying that you don't need to go for the appraisal, this is kind of priced right, like how does one navigate that conversation? Should I always get an appraisal, or is this something that's optional?
That's a really great question, Priya. So basically, appraisals for the most part, they are required for a lender if you're obtaining a mortgage, right? So basically, when lenders run the property address and purchase price under an automated underwriting system, you might get something called a value acceptance. People tend to think this is called an appraisal waiver, but technically value acceptance, and it basically means an appraisal is not needed. The home value is already justified, and that at that point is optional. Waiving the appraisal contingency, that's an entirely different thing. So it is really important to know in a contract, there is something called an appraisal contingency. It protects you as the buyer that in the event the appraisal comes in under than what your home was accepted for, you, the buyer, can negotiate or back out and get your deposit back. Now, a very common practice is to waive this. So that means even if it comes in under, I am moving forward. So it depends on if you waived it or not. And then value acceptance is if an appraisal is necessary to close the loan. So they're different things.
Yeah. And that guidance is generally going to come from your lender, like depending.
Absolutely. Yeah.
Okay. So I think the lender might just be able to say that, hey, looks like this is going to be a good price any which way. You can choose to waive off appraisal if you want. Or they would say that, just go for appraisal, and depending upon what comes back, we can then take that forward. Is that how it would work?
That's exactly it. So once someone is under contract, we will say, great news, we got a value acceptance. We don't need an appraisal. You save $450 to $600. At that point, it's optional if you're just curious to know. So those, we ultimately confirm once their offer is accepted and we have a fully executed contract.
Okay, I wanted to tap into that a little bit more. So you just said that once it's under contract, sometimes you will be like, it's not needed. What are those cases when you would be like, we don't need to do appraisal? How would you decide that? Yeah, a very common misconception is if you're putting a large amount down that you think you don't need it. And that's not true. We've gotten waivers for 20% down and less. It really depends. So basically, when you run the property address and the value or the purchase price internally through our system, it already has comps of their own, so comparable sales. And so when you run it through the system, it basically deems that the value is already justified by these comps. There's no need to do one. This isn't always the case that we get it. Sometimes we do, but it's by far we love giving that news because it saves you money. Yeah. And then that's also not guaranteed when you refinance. You may have to pay for one at that time. So a lot of people, if it's an option, they'll choose to save, a couple $100. Got it. No, that makes sense. Yeah. Okay. I think we covered a little bit on the appraisal. Now to the title company. What role does a title company or agency play in the home buying process? And what fees are typically associated with these services? Why is title insurance so important for a new home buyer? So the title company, they are a key player. They're basically responsible for making sure that the home is free and clear. There's no liens against it. You are the sole owner, along with anybody you add to title and deed.
Now, it depends on the state, but New Jersey, technically, in most cases, you can select your own title company. But I always caution people because there are thousands of title companies, that you can choose. And you really want to use someone who's reputable, who does their due diligence, of course, but can also accommodate if you have a quick closing and things like that. So I always suggest to go with your attorneys preferred just because they're highly recommended. You know that they can get the job done. In terms of the costs, that really varies between the state. In New Jersey, it can be 4,000 to 5,000 plus or minus. But what's really nice is that's actually a suggestion I always give to people. If your attorney selects your title company, you can ask them, does the title company have some kind of cost sheet that I can refer to? So it really depends. Title insurance, that's actually a closing cost. So it's mandatory for mortgages. And the same thing, it basically protects you and it protects us in any kind of rare circumstance post-closing. There's a lien against your home, you are protected and we are protected. And attorneys will usually go over this in a lot more detail.
Okay. No, that's super helpful. I want to understand a little bit of the role of an attorney in the home buying process. So, what are these legal fees involved when purchasing a home? What do these fees cover? And when does a first-time buyer need to engage with a real estate attorney?
Mm-hmm. So it actually depends on the state if attorneys are mandatory. So New Jersey, they are, but they are crucial, honestly. We've had people that purchase homes out of state and attorneys aren't mandatory, but they like to have one because they just make the transaction that much smoother. They basically protect you and they advocate for you as a buyer. They let you know of your rights and how you can negotiate. And especially areas like Hudson County, I can attest to how crucial a reputable and reachable attorney is. As you know, Priya, once your offer is accepted in New Jersey, you enter a period called attorney review. And until that period is over, any offers can swoop in and the seller can legally entertain it. So you might get countered during that time. So not only, reachability and the reputation of an attorney, you want to make sure they move quickly. But overall cost, it really depends. I would say on average, $1,500 to $2,000. Sometimes employers also cover them as well. So it really depends. But you get to choose your own.
Okay. No, super helpful. It's basically to make the process super easy and make sure that anything that you're unable to foresee, the attorney is able to partner closely with you and help you navigate that process.
Exactly. Yeah. So a lot of the times, actually every single time, we will be in touch with the attorney, title company every single day up until closing. And a lot of times attorneys too, the really great ones, they will also reach out to us and make sure that everybody's meeting the timelines. So in my opinion, they're very crucial and always recommended.
Got it. Okay, let's go back to pre-approval. Okay.
Yes.
So, for example, I am a first-time home buyer. I got my pre-approval. Now, what are the critical next steps of the home buying journey, starting with the real estate agent to closing? What does that process look like?
Yeah. So you are now pre-approved and you're starting your home search. And your two key players are your agent and then, of course, your lender. So it's really important to have a local agent, someone who is reputable, seasoned, familiar with the market, because they have access to listings that may not even be on the market. So you get first dibs. They also will ask you what kind of things you're looking for, a 3-bed, 2-bath, close commute to the city. And if they don't have something for you now, they will keep you on the radar. They also, negotiate to give you the best deal possible. They will advise, what to go in at, just enough to get your offer accepted, but so that you're not overpaying. So being in touch with an agent is the first thing. And as they show you homes, something that we do, we work together with the agent. Clients will send us a handful of listings. We'll show them the monthly payments with the taxes, insurance, HOA. And then 9 out of 10 times, once they see the monthly, they will decide, okay, this is within my budget. Let's go see it. Or this is way out of my budget. I don't want to waste my time. So we all kind of work together. And our team, once we send your letter, we touch base with our clients on a weekly basis just to check in, because rates do move every day. And we are in a bit of a volatile market. So you want to make sure you know your monthly prior to placing offers.
Got it. So once
Yeah.
you're pre-approved, start seeing your homes, work very closely with your lender and your real estate agents, understand your monthly payment, and then once the offer gets accepted, then you have the rest of the process of bringing in your attorney, listing, like all of those services and going from there, correct?
Yep. Exactly. Yep.
Okay, perfect. Now, I think like the first time home buyers do consider different types of properties. Can you outline the key differences and factors to keep in mind when someone is deciding between a condo, a single family home, a multi-family home? And I would love to also break it down before like people who want to live in it and people who want to invest in it.
So from the first call, there are so many times where people say, "Oh, I'm looking for a condo, but I might be open to a single family, or I might be open to a multifamily." So people are always exploring all options. And that's where we'll educate you on the very first call. So of course, the down payment, it depends on the property type. I would say it's more so heavily dependent on the occupancy. So, like, for example, for conventional loans, primary residences, single families, and condos, so one unit, you can put as little as 3% down in most cases. For multifamilies, 2 to 4, you can put 5% down as long as you have 6 months of the monthly payment and cushioning. For investment, it's entirely different. So conventional loans, they require 15% down for a single family or condo. And then when you start looking in the multifamily space, you have to put 25% down. We do have other products internally, but just to, go over conventional, those are the main differences. Investment, you also need 6 months of reserves, which a lot of people don't know. So that really depends if you have it or not, and if you're in a position to buy it as an investment. But I would say all the time, occupancy. People say, "Oh, I, really want to buy a primary, but I found something that might be a great investment opportunity." And we can show you both, right? So we show you the monthly payments as primary. The rates are lower. Investment, the rates are higher because there's added risk. But once you see the monthly payment as an investor and you couple it with your agent's, remarks about cash flow and what it's being rented out for, you will make a decision if it's a good investment for you.
Got it. So, two questions I have there. I think you mentioned that 6 months of monthly payment. Is that correct? Is my understanding correct? That 6 months of monthly payment needs to be available for an investment property and not for a property where you're going to live in?
Yes, that's correct. So for primary, you do have to have 6 months of reserves as well for multifamilies. For conventional investment, no matter how many units, you do have to have 6 months of reserves. So reserves are just like funds sitting in your retirement account or your stock account. You don't have to liquidate it. You just have to show it.
Got it. And
Yes.
my next question was around interest rates. You mentioned that the investment property interest rates are generally higher than your primary. Can you give a little bit more around what that difference looks like?
Yeah. So I want to say at least a whole percentage, sometimes less. For investment, the down payment really goes a long way. So I mentioned earlier the minimum is 15% down, but the moment you start putting 20 and 25, so on and so forth, the terms significantly, are more improved. So it really depends. For example, interest rates right now, they're like low to mid sixes for the 30-year fixed primary. And then in the investment space, I would say high sixes, maybe low sevens, but it's heavily dependent on the down payment for investors.
Okay,
Yeah.
so it's dependent on the investment. Okay,
Mhm.
so let's specifically deep dive into the investment properties. What are the two, three additional factors someone should rigorously evaluate, right? Like,
Yeah.
is it property management? Is it condo, single family? Like what kind of location? Like, what are the things that they should keep in mind if they are just looking to go for an investment property?
I would say affordability and then, of course, desirability, right? So you're an investor, you want to make sure that you're making money. So things like current cash flow or market rent, property appreciation, right? So like Jersey City is one city, but there's multiple bureaus and the rate for property appreciation may vary. So that's where it's really helpful to have an agent who can find out those details for you. Another important thing for investors that we talk about are if there's a tenant in place, right? So if there's a tenant by the time that you're closing and they're in a long-term lease, us as lenders can credit you that income, But if it's vacant or the tenants are in a short-term lease, they're going to be gone, we can use market rent, which is typically higher. So those are very key points for investors. If there's tenants in place, the market rent, the history, property appreciation, and then to go over desirability, really important criteria is school district, location, close commute to New York City. That's a very common one. So it really depends. And then again, monthly payment, you want to make sure you're making money every month. So that's where we have a lot of investors who aren't necessarily looking to buy anytime soon, but they want to know their monthly payment to make sure it makes sense for them to even look at.
No, that makes sense. I love the affordability and desirability. I think that's such a great way to kind of summarize what someone should be thinking about when they're going for investment properties. Now, I think, Esther, you've been in the space for a very long time. What are the 2 or 3 common mistakes you see first-time home buyers make, particularly when they are trying to understand the full scope of costs, what they are getting into, etc.?
So from a cost perspective, I mentioned this, but not getting pre-approved with the right lender. Because I mentioned, we make sure that we set expectations correctly. We've had a lot of times, for example, there's people who are pre-approved prior, and sometimes lenders just send a letter and then you're on your own. So we've had times where people didn't know about certain costs that are really significant, like New Jersey's mansion cost. If you buy a home 1 million plus, there's a 1% tax due at closing. So 1,010,000. So there are genuinely people, Priya, who had no idea that this existed, and they're freaking out saying, I thought I was going to be using that towards down payment. Now I have to pay this towards closing costs. So that's number one, not having the right lender explain things to you, because how else would you know, right? Another cost mistake, I would say, is being too hyper-focused on the interest rate. There's a lot of bait and switch out there where lenders will say, I can promise you this interest rate, but they don't disclose their large application fee or any points to secure that rate, or broker's fees. They're going to be outsourcing your loan. So you really want to make sure that you're not too focused on the rate. It is important to get a great one, but you want to know the costs associated to secure that rate. You don't want to overlook it. So that is a huge one. Overall mistakes, I would say shopping too early, because rate locks, they are property and duration specific. You can't lock in until your offer is accepted. So a very common mistake is people who haven't even found a property will shop rates, and you will drive yourself crazy because they move every day. They move intraday. And you also put yourself at risk of hard pulls, because sometimes when you fill out an application, they do a hard pull right away. And it's tough when you're building on your credit and you had no idea. So shopping for lenders at early stage is a big one too, outside of costs.
And I think you bring up a very interesting point, because a lot of the audience that would be listening will probably be doing this for the first time. They've moved countries and they're trying to figure out the space. Do you have any thoughts on lender watch outs or lender red flags that one must keep in mind, or what kind of questions should I be asking if I am just talking to different kinds of lenders?
Yeah, definitely. I would say the credit check is the most important, because hard pulls, right, they can affect your scores. They expire in 4 months, and who knows how long your home search is going to take you. So that's the biggest mistake I see first-time home buyers make, especially people who are coming here and they're trying to build on their credit, or they have an established credit and they have one trade line and they're trying their best to build it, trying to make a long-term goal to buy a house. It is so disheartening to me when people pull credit without consent. We will never do that. Even if we have consent, we'll absolutely make sure, because it's a sensitive thing. Everybody has their own journey with how long they've been, trying to build their credit. So that's definitely a key thing, hard pulls, and staying away from them as much as you can, and asking if you're doing a hard pull. Yeah.
Okay, so number one would be just understanding the credit pull, whether it's hard or soft. That's one. Is there anything else that someone should keep in mind when they are talking to the lenders to really understand whether this is the right fit for me, or should I still continue talking to different lenders?
Yep. So I want to say, kind of going back to what I mentioned, the bait and switching. So there's, unfortunately, if you Google, average interest rate and things like that, it's highly likely that you're getting misled. There's points that are associated. They're not tailored to your credit profile. So you want to make sure, Eventually, you'll get a document confirming the exact terms and the costs. But key questions to ask is, if they offer an interest rate, you have to ask, are there any points associated? What's your application fee? Are you brokering my loan? Things like that. You want to know, besides the interest rate, what costs are associated and how they're going to conduct the process, like a broker loan. That's a very common one where we'll see on their cost sheet of a different lender, there's like a $10,000 cost and it says broker's fee. That means they're outsourcing your loan. You might have an underwriter, out of state and a processor in California, so you really want to make sure that you are in great hands. But yeah.
Wow. No, that's super helpful. So outside of just like interest rates, like understanding the process, getting that document, like how are you doing it? What exactly does it mean? Will help people make the right decision. And I know, like, Esther, thank you so much for taking time. And for everyone, I just want to reiterate, like, I was talking to Esther, I just ended up learning so much, and she was grateful to like find some time and do this on a Friday. So here we are bringing this to you. But Esther, is there anything that you want to share with anyone who's a first time home buyer, whether looking for a primary or investment property, that we did not end up covering in this video?
Overall, it's something I always highly encourage. Again, even if you're thinking about it, get pre-approved. Your first home purchase, it's an achievement. It's a huge milestone. You are actively choosing not to put money towards someone else's pocket. You are putting money into yours. And, the value of the home will also grow too. So you want to be smart because it's a really big investment. You want to make sure that you are knowing all the products out there. And I hope, all the tips that I gave will eventually encourage someone to, explore their financing options.
No, absolutely. And I will definitely leave Esther's details below and Cross Country's details below, but they were fantastic. Thank you so much for taking time. And for everyone who's been listening, if things aren't going your way, remember it's OKR because they will eventually turn around. Until next time, this is Priya signing off. Have a wonderful day.